Did your or a friend's Medicare premium suddenly skyrocket? Do you think that you're paying more than you should? If so, then listen up. You may have recourse, but you need to act quickly. Welcome to the Retirement Fix, a podcast for less stress and more success in your go-go retirement years. Hi, I'm John Gigliello, a certified financial planner with the Albany Financial Group, and I'm here to be your guide to keeping more of your hard-earned money by making smart financial decisions in retirement. This podcast is for people nearing or already in retirement who want to learn more about proactive tax planning, retirement income planning, Social Security timing, investment management, and asset preservation. After a life-altering health issue at age 39, my calling in life became clear: to share my knowledge of personal finance with people who are looking to make smart and responsible choices with their money. Now, if you still have questions after listening to this episode, please visit my website at www.jgigliello.com, where you can find all of my contact information as well as details of the services I offer. I'll put that link in the show notes. Now on to the subject of this episode. Today I'm going to talk about the IRMAA surcharge that catches many retirees by surprise, and what to do if you believe you are paying more than your fair share. Now, IRMAA, I-R-M-A-A, stands for Income-Related Monthly Adjustment Amount. It's an extra monthly charge added to your Medicare Part B and Part D premiums if, essentially, you make too much money in retirement. The Social Security Administration determines your IRMAA based on the modified adjusted gross income reported on your tax return 2 years prior. So, 2025 premiums are based on your 2023 income tax returns. Medicare Part B covers doctor's visits and outpatient services and currently costs about $185 monthly. Part D, which covers prescription drugs, the premium varies based on the plan you choose, but averages about $46.50 per month. In 2025, individuals who made more than $106,000 in 2023 and married couples filing jointly who earn more than $212,000 will owe the IRMAA. The surcharges can be quite steep. An individual who earned between $106,000 and $133,000, or a couple who earned between $212,000 and $266,000, will owe an additional $74 per month for Part B and $13.70 for Part D. And that's the lowest bracket. The surcharges increase incrementally up to $443.90 for Part B and $85.80 for Part D for individuals who earn more than $500,000 and couples who earn more than $750,000. Again, these are monthly surcharges in addition to the regular Medicare premiums. However, you might be able to appeal if one of these scenarios applies to you. Number one, the income the Social Security Administration used is incorrect. For example, the IRS provided outdated or incorrect tax return information. Two, you had a significant income drop in the previous 2 years due to a qualifying life-changing event, which I'll cover shortly. 3, your tax filing status has changed, affecting how Social Security should assess your income. 4, you experienced a one-time spike in income, such as a home sale or Roth IRA conversion, which is not representative of your ongoing income level. Now, a side note, this happened to a client of mine a few years ago. She was surprised by the IRMAA surcharge that was assessed. It turned out that she had sold an income property 2 years prior, creating a $150,000 capital gain and pushing her income into one of the IRMA brackets. Because this was a one-time event and not indicative of her typical income, she was able to appeal the surcharge. The life-changing events that may qualify for an IRMA appeal include marriage. So you are recently married and your combined income is now lower than the threshold. Divorce or annulment. You divorced or had your marriage annulled, lowering your household income. Next, the death of a spouse. The loss of your spouse could have resulted in lower household income. A work stoppage. You retired or lost your job, significantly reducing your earnings. Or a work reduction. You reduced your work hours, causing a substantial income drop. Or perhaps the loss of income-producing property. You may have lost rental property income due to a disaster, a market downturn, or other factors. Loss of pension income. Your pension income has been reduced or eliminated. Employer settlement payment loss. You no longer receive a settlement payment that previously increased your income. So what can you do if you fall into one of these categories? Well, the first thing you want to do is to gather the documentation required to prove you do not owe the surcharge. These include proof of income change, such as your most recent tax return, W-2s, pay stubs, or 1099s showing reduced income, a letter from your employer confirming your retirement or job loss, a pension reduction notice, rental income statements or investment account records if the loss is due to investment or rental properties, and perhaps proof of a life-changing event, including a marriage certificate, a divorce decree, a death certificate if a spouse passed away, official termination letter from your employer, or legal documents related to a property loss or pension termination. The next step is to fill out Form SSA-44 if your appeal is due to a life-changing event. You can download this form from the Social Security Administration's website at www.ssa.gov. You will need the following information to fill out that form. Personal information, including your name, Social Security number, and Medicare number, the type of life-changing event that occurred, your new estimated income for the current year and next year, and any supporting documentation to prove the change. Finally, you will submit your appeal either in person or by mail. You can locate your local Social Security office at the ssa.gov website. And please note that your visit may require an appointment, so call ahead. You can also find the mailing address for your local office on the website if you choose to mail your appeal. To follow up by telephone and inquire about the status of your appeal, the phone number is 1-800-772-1213. Once you submit your appeal, you can expect the review to take 60 to 90 days, but I've heard of appeals taking as long as 9 months. If your appeal is approved, the Social Security Administration will adjust your Medicare premium and you will receive a refund if you've overpaid. If your appeal is denied, you can request reconsideration by submitting Form SSA-561. This allows you to request a second review. If your appeal is denied a second time, you can escalate it to an administrative law judge. You can also track your appeal online using your Social Security account at www.ssa.gov/myaccount. Keep copies of all documents for future reference, and if you do not hear back within 90 days, contact SSA for a status update. While there may be recourse if IRMA is incorrectly assessed, it's even better to avoid triggering the surcharge in the first place when possible. Of course, some life-changing events cannot be avoided, but you do have control over your finances to a great extent. With careful financial planning, you may be able to avoid falling into one of the IRMA brackets. When performing a Roth conversion, you should factor in the potential for a 1-year hike in Medicare premiums, along with the tax bill. To reduce the chance of the IRMA surcharge, you may want to spread out a conversion over several years. If you're still working, you can contribute to your 401k or other tax-deferred accounts, which will reduce your modified gross income used to calculate the surcharge. If possible, avoid taking large one-time withdrawals from your traditional IRAs or other tax-deferred accounts. You can also use qualified charitable distributions to lower your MAGI, modified adjusted gross income. If you are 70 and a half or older, you can donate up to $100,000 a year from your IRAs to charitable organizations. If you expect large capital gains in your non-qualified accounts, tax loss harvesting can help you offset those gains to prevent that large spike in income. Now, one of the services I offer high net worth retirees is proactive tax planning. We review anticipated income from all sources each year and employ strategies to help clients make the most of their hard-earned money. If this sounds like something from which you could benefit, please reach out to us. You can find more about the services we offer at www.jgigliello.com. And don't forget, we always encourage you to take part in the financial planning process to pursue a confident financial future and, in turn, feel optimistic and proud about your accomplishments. If you've diligently saved over the years and have accumulated investments in retirement assets, and you understand that the success of your retirement is too important to be managing yourself, and you value experienced and professional guidance, feel free to give us a call for a complimentary initial consultation. Knowing that I've provided education and a plan for my clients has allowed me to turn my own personal challenge into a gratifying journey. If you found this helpful, please share this episode, and don't forget to subscribe. If there's a financial planning topic you would like us to address on a future episode of The Retirement Fix, please reach out and let us know. So thanks for listening, and make it a great day. John Gigliello is a registered representative with and securities are offered through LPL Financial, member FINRA, SIPC. Investment advice is offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Albany Financial Group are separate entities from LPL Financial. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. Albany Financial Group and LPL Financial do not provide tax advice or services. Please consult your tax advisor regarding your specific situation. Traditional IRA account owners have considerations to make before performing a Roth IRA conversion. These primarily include income tax consequences on the converted amount in the year of conversion, withdrawal limitations from a Roth IRA, and income limitations for future contributions to a Roth IRA. In addition, if you are required to take a required minimum distribution in the year you convert, you must do so before converting to a Roth IRA.